Hey everybody, it's Ron from Ron's Basement. Thank you for joining me today in the basement. You, yes you, the center of your universe. I'm glad you're here in the basement, and we will try to maybe gain a level of understanding about what's going on in the overall economy and how that might affect us in regards to our holdings in gold, silver, and precious metal mining stocks as we go into the future, right? None of us have a crystal ball, but I was reading a comment on one of the videos from a nice lady named Helen, and it kind of prompted me or got me thinking about a couple things, a couple like big factors that are influencing the economy. Now, I'm not an economist, but just kind of on the level that I look at things, I made a list, so I'm going to glance down and kind of read these to you. The first is, I was thinking the other day, like all this government stimulation that they pumped into the economy, all the cash and the direct payments that most middle class and maybe even upper middle class Americans got, those are gone now, okay? So that's kind of a negative for the wealth effect. You know, a lot of people got, I don't know, $3,000, $4,000, $5,000 in direct payments into their bank account from the federal government. And I know that was a while ago, but I think that money, you know, that was money that was kind of spent during the last year, and that's gone now, and that's not good for the economy. The other thing is that just recently, I think the NASDAQ is down almost 15%. The S&P is down maybe 11% at this point from its highs, that the wealth effect generated by the stock market, and for that matter, also cryptocurrencies, right? I don't know how many trillions of dollars in market cap have been erased from the cryptocurrency world, but between the stock market and the crypto world, there's been kind of some destruction of wealth, and that affects how people spend their money, more the wealthy people, and then people that are kind of heavily invested in the markets. But nonetheless, that's has a negative impact on how people spend money, what they do with their money, how confident they feel about the economy. But at the same time, and it gets confusing, right? At the same time, we have inflation. That I won't go on about that. You've heard about inflation ad nauseum, but there we have this inflation issue going on. And then at the same time, we have a supply chain issue and shortages in certain areas that seem to be persistent. Are you confused yet? You know, we're gonna try to wrap all this together and see where we think the economy is going. And of course, we have interest rates that are going up, borrowing rates that are going up. That's not good for the economy. So I started thinking like all these factors, all this kind of wealth destruction, no government stimulus, but at the same time we have inflation, right? But then at the same time, there's supply constraints. So we've got less goods going into the market, but then in theory, maybe less demand for those goods. So wouldn't that kind of take the pressure off of inflation, right? Supply and demand. But then are those real, you have to kind of look at the difference between like real and nominal type numbers, I guess you would say. If inflation is as active as it is because, for a number of factors, and we have a lower supply of goods and services, right? Because people aren't working either. If let's say something that used to cost $1 now costs $1.20, but there's 15% less of that being sold, does that make everything look like it's still at the same level? Are you following me on this? Or is there, even though there is less activity, right? Something that cost $1 a year ago that now costs $1.20 or $1.50, right? How do we measure that? How does that, is it in real terms, there's less economic activity going on now because the price is higher, but the volume of sales, which can be contributed to by the decrease in wealth effect, and or the hold on, or the supply chain issues. It's really screwed up, okay? It's really screwed up. And then you got the Fed raising rates. That puts pressure on households and businesses, right? Because it costs more to borrow money, or you're paying more in interest expense. And the whole thing, I don't know, it feels like to me that, like, I don't want to say the whole thing could blow up, but that almost like it could become a downward spiral, if that makes any sense. I don't know. It's very confusing. I don't think anyone who's trying to predict what will happen with any level of accuracy should purport that they really know what they're talking about, because there's a lot of moving parts. And I've said this before in my previous videos, these moving parts, they're moving faster and faster, and they're more and more screwed up because of all the intervention done by the government, all the interventions done by the Fed, all the manipulation that goes on in the markets. It's just, you know, things are moving much faster. You can watch some previous videos if you want to listen as I extrapolate upon that. So at the end of the day, it creates a lot of uncertainty, which is good for typically precious metals. And, you know, we're seeing today gold price above 1850, and we're seeing the gold mining stocks tank yet again. But, you know, at the end of the day, at some point in the future, if the price of gold, the price of silver continue on this upward trajectory, that will have to filter through to the stock prices. All right, guys, thanks for watching. I hope you enjoyed my video, and I hate to do this, but I'm going to throw one more thing in that I forgot to mention. That's the midterm elections coming up, and the political posturing and the manipulations of the markets that may or may not occur on a very macro level because of political agendas. I'll leave it at that. Once again, thanks for watching. I hope you're doing well, and we'll talk to you soon. Bye-bye.